All right, everyone, it is July 1st. I'm casual today because, I don't know, where I live, everybody turns this into a one-week holiday, and I'm actually one of them. I'm taking off to Southern California tomorrow, but I'm trying to get committed to doing these rate updates every Monday. I'm not trying, I'm going to. So here's what's going on. Trump meets in North Korea. Mind blown that actually occurred. Tariffs in China get sorted. Both of those things happening, it feels like we're kind of out of the woods, and you would think rates would rise as a result, but they're holding steady. So let's jump into the details right now and take a look at what's going on. Right, everyone. So as always, we're starting off looking at the 10-year U.S. Treasury. If you're not following this on your stock app, pause this video, take a minute to look that up. You can Google it, but follow the 10-year Treasury. If you're looking to know what mortgage rates are doing, it's the best publicly available gauge possible. Now, that being said, it's not perfect, and we're going to discuss why it's not perfect with this exact video. So let's get into the details first, and then I'll tell you why it's not perfect. So what are we seeing right now? We are seeing the 10-year Treasury at the lowest levels we've seen in quite a while. What we're looking at right now is the last 3 months. But what you can see right here is an obvious floor. So something, right? So we're bouncing off this floor over and over and over again. And what's really interesting to me is obviously we have a ceiling right here. So this has been our trading window for the last 7 to 10 days, which is pretty narrow, right? You're looking at, just below 2 up to like 208, 2075 to be exact. Pretty narrow, right? And if we go back even just a little further, we can open that up and you'll see that we're right here, right in about 215. So really, you're looking at a 15 bips at the max trading window, which is very minimal. So what's happened recently is the news has started saying that rates have reached a 2.5-year low. Well, let's take a look and see if they're right. If I go back 2 years, yes, the 10-year Treasury, why can't I draw lines today? The 10-year Treasury is at the lowest point it's been at in the last 2 years. But like I said, this is not a perfect science. So let's look at mortgage-backed securities, which are not publicly available. I follow them to make sure you get the best rate. So let me show you what I'm seeing there. So we're going to jump over to there. I'm going to get rid of these lines real quick so we can just look at the data without any averages. Okay, so looking at this, over the last quarter, you'll see that we have reached the highest point, and mortgage-backed securities rising is a good thing. That means rates are going down. And what you'll see is same pattern, right? So we went up, and then we have this flat line here, and we have resistance here. So this is our trading window, which coincidentally is about 20 basis points, 22 basis points. We've touched above it, but we've always bounced back down. So now let's look at what mortgage-backed securities have done over the last 2 years. So you'll see this. We're not quite at the lowest we've ever been. We're pretty darn close. Pretty darn close. So right here is where we are today. And you can see we were a little bit better just over 2 years ago, or right at the end of 2 years. So are we seeing the lowest rates we've seen in 2.5 years? No. We've seen them slightly lower. Really, I'd say the very bottom is like 3.5%, and right now we're seeing 3.7 to 3.875 on a 30-year fix, which is absolutely incredible. VA rates are hovering in the low threes. I'm helping someone right now. They're getting 3.375%. So by far the lowest rate. So what does that mean? It doesn't mean you hold out for better rates. Take advantage of the market right now. If your rate is above 4% and you own your home, you should be refinancing right now. If you're looking at purchasing a home, you don't hold out hoping we reach this, little level here that's slightly better. You buy now, and then if rates drop even further, guess what? You refinance as well. So I'm keeping a close eye on this, but my goal is to make sure you're well educated and you understand how the markets work to your benefit. So that's where we're at. Make sure you're following the 10-year Treasury. Easiest way to kind of see what's going on, but like we just discussed, it's not a perfect science. But it's better than nothing. So that'll give you a decent gauge of what's going on with mortgage rates. You'll be able to call mortgage guys on their bluff. If you're not working with me and you're working with someone else and they go, oh, rates went up, you're like, no, I don't think they did. So that's the purpose of that. So if you have questions, comments, concerns, you want to understand more details of how all of this works, open book, happy to help any way I can. Have a wonderful 4th of July, and I will catch up with you guys next Monday. Thanks so much.